Retail investing has never been more accessible than it is right now. There's a million apps where you can log on and you're able to purchase stocks today. Most of these apps allow you to get all the news for any industry or individual company that you're looking for as well. And getting investment advice has never been easier than it is right now. You can hop on YouTube, you can go on Twitter, you can find all these different people telling you to do different things with your own money. And this should be a good thing when you look at it from an outside perspective. What the problem is a lot of retail investors aren't losing money because they do not have access to be able to purchase stocks or ETFs, mutual funds, whatever. They're losing because they are focused too much on what people are saying and the actual market trends, and they don't have enough discipline to stick with their investment goals. Now, I have a lot of retail investor problems that I want to talk about in this video. First thing I want to talk about is retail investors treating investing like entertainment. They treat it like it's a game of some sort. You see this with the gambling in this, younger generation as well. They kind of treat the investing like the same thing. People are day trading, stocks, trying to make a lot of money in one day, which isn't, responsible or probably what they should be doing with their money. And even something like the GameStop or like the meme coins that blow up, people are just putting money in, trying to make a quick buck, and it doesn't really work out. The second problem I see with retail investors is they think long-term, but they always act short-term. And I've been having a conversation with some of my friends about this as well. Even with the, whole Iran war going on, we're all like, long-term portfolios, but people are like debating selling, and we're like, what are we doing? Like, we should not be selling anything. We should be trying to buy more. The market drops and people just get scared, and it's easy to say that your portfolio is long-term, but it's harder to not sell and just hold on. Fortunately, I didn't sell. I actually bought more, and now we're back where we started basically, so no money was lost really. And people like to think they can predict what's going to happen in the market and make choices to save themselves from, whatever crash is coming, or if they're going to invest more, they think it's going to go up, right? You should just be investing the same amount of money in your same stuff that you feel comfortable in your portfolio. I would seek a professional for that advice. I am not one. And yeah, just be putting money into that stuff every month and not even looking at it. The third thing I want to talk about is retail investors always think they need a new stock to invest in or a new whatever, and that's just not the case. Most of the time they need better behavior. They need to be putting money consistently into a good thing, whatever that you think that might be, and just sticking with that, instead of trying to always find, every month it's a new stock, a new company, a new ETF or whatever that's going to, blow up and they're going to make a lot of money. And the truth is you don't need more stock picks. You only need a few good diversified ones and you should be all right. And not necessarily in one stock, or, should be in like something that's well diversified. I also see a lot of retail investors, they're addicted to like cheap stocks. Like they like to own like 300 shares of, a $1 a share company because they think if it goes to $10, they're going to, 10x their money or something. And it's just like, they shouldn't even be doing that. That's just kind of one thing I saw. I know one person that I've seen do that, and I just thought it was ridiculous. They were like, why should I get, one share of whatever when I can get 500 shares of this terrible company when it could go up a little bit and I make way more money? Just stay away from that. People like to think because the stock's super cheap, they're finding good value. But in reality, they probably have no idea what they're talking about. So I would just avoid that altogether, that mindset. I mean, if you do find value in a cheap company, then yeah, totally go ahead and invest. But just because it's cheap doesn't mean there's value there. And I think social media has really ruined retail investing. People get pulled into weird behavior from social media when it comes to investing all the time. I mean, go back the last 10, not even 10 years, 5-6 years, and you see things like Dogecoin, GameStop, and all these companies that just go nuclear because the Twitter went crazy, right? And they were like, invest, like, we're going to hand it to whatever, but they were trying to, make a statement or make a lot of money. It just stay away from all of that. And I think social media makes patience harder. Like I myself follow like some, pages where people post like crazy trades they made, and, they made $10,000 in 10 minutes on some option trade or whatever. And it just like, they don't just don't even listen to that. I just follow it because I think it's interesting, but I don't actually do any of that. I just follow the page because, I think it's fun to see or whatever. But a lot of people look at those pages and try to trade off that information or copy people's trades, and it's not going to happen. A lot of retail investors also underperform the market average. This is because they're chasing big gains that already happened and they weren't in the market to begin with, or they're buying at all-time highs because, you know, everyone's excited online and they're selling when it goes down a little bit and just taking the loss. You know, we're switching strategies way too often. You just need to find your one good solid strategy and stick with it and just keep doing it no matter what the market does. If you believe in that strategy, obviously, and you have found a financial professional that knows what they're talking about, and it's not me. This is kind of the opposite of the risk thing, where people see it go down a little bit and they sell as the opposite. People don't realize how risky that what they're investing in actually is at all till they have some like crazy event happen to them where like they put all this money in something and it went to like they went down 99%. I've seen a few people that's happened to, and they really respect the risk now of the investing game. I think a lot of retail investors take investing advice from friends and family and things like that, where they actually have no real results backing up their advice or, you know, structure that they're operating out of. And I think following people online, you know, just because someone has, you know, 500,000 subscribers and they're talking about what they invest in, doesn't mean that maybe that's what you should be investing in. And there's like the crypto guy, the dividend guy, the value guy, and they'll all defend their positions like they think it's the right one. And that's fine, you know, obviously everyone has their opinions, but that doesn't mean that they're necessarily right all the time. And I'm not telling you what's right and wrong in this video. I'm just trying to bring up some issues that I think are happening right now to just everyday people investing their own money. Obviously, I'm not a financial professional. This is just my opinion on the matter. Let me know what you guys think. Thanks for watching.